Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 25th of May. Starting off with the FTSE 100, where the clue was in the falling 50-day moving average that we had since basically the start of the month. That's dragged us down towards the 200-day line, 75.30, but hopefully that will be the low on the current sell-off. We have the rising 200-day line and the floor of that rising trend channel from back in August, and October uptrend line there around 75.30 as well. Obviously, the upside here currently capped by the 50-day line, and below 75.30 we have the risk, obviously, of a retest of March lows, but that is obviously dependent on debt ceiling worries. Moving on to the DAX, which was outperforming the FTSE 100. Obviously, at the moment, not looking quite as chirpy as it was just last week. Headed down towards the 50-day moving average area around 15,600, and that's also where the rising 50-day moving average is as well, and also we're below the RSI 50 level for the first time since late March. So the risk here, not only of a test around 15,600, but fresh leg to the downside, maybe towards the mid-March resistance area around 15,300. But at the moment, we may get away with, we have the feeling we might get away with a 50-day line test on the DAX. On to the Dow, which was always rather more grim than the DAX and the FTSE. Here we've had a test towards the towards the 200-day moving average around 32,800. Hopefully that will be the low of this move, but there's obviously the chance of a rollover towards 31,700 and March support, and that would obviously be a very disappointing thing to happen, especially after all the multiple failures that we had to get through 34,000 from November onwards. RSI at 38, so still a bit of scope there for a fresh move to the downside and push down to the RSI 30 area, where hopefully there would then be a rebound opportunity. Moving on to Bitcoin, which has been trying its best to stabilize since the April sell-off, or the retreat that we've had through or from the 30,000 area. Currently around or just below the old March support there, 26,700. Below that risks a test of August to February resistance around 25,000. But at this stage, not looking for anything further than that, even though there's been a gap down this week. And we do have support there, or notional support, below 25,000 at 22,500, and the 200-day moving average. RSI failure, persistent RSI failure below the 50 level, or at and below the 50 level, not helping the picture there for Bitcoin. And obviously we've got that falling 50-day line. That's way up there at 28,200, and we want to see that broken, ready to give us a chance of retesting 30,000 plus anytime soon. Moving on to the stocks, and frequent flyer here has been Abingdon Health, and we had that V-shaped bull flag. We've broken the initial May resistance there around 10.5 pence, and our previous target at 12.5 pence, which is nice to see. Peaked at 12.75, above 12.5 pence on an end of day close basis, looking for 20 pence at the top of that broadening triangle from the early part of last year. That could be hit, 20 pence area that is, as soon as the end of next month. But at least while we're above at the initial May peak, we're on the bull tack there with Abingdon Health. Active Energy is a stock which I looked at, I think yesterday actually, as recently as that. Here we've got a situation where we've got this rising trend channel that's been in place since April last year, gap through the 50 and 200-day moving averages, and we've actually broken the gap up day, which was around the high of yesterday, around 5.3 pence above that, looking quite confidently now for a move towards 8 pence. Unfilled gaps to the upside near the low tend to be very good, or reliable signals, let's say, on mini stocks. On to Cleantech Lithium, which is a requested stock. Here we were looking for the shares to break that February resistance line. That was around the 41 pence area. It's now up to, it was around 40 pence, and above 40 pence we're looking for at least the 200-day moving average area and the 50-day line, in fact, both together there, around 49 to 50 pence, hopefully over the next couple of weeks or even sooner. Clontarf, a stock not for widows and orphans, and you've seen the picture of a sort of broadening triangle that we've had there since September. Nice bounce for the shares above the rising 200-day moving average, which gives us confidence that there's going to this rebound will have legs. We want to see an end-of-day close back above for the April support there around 0.113. If we can get, which is actually almost where we are at the moment, if we can get that, then hopefully it's back up towards the main resistance for the shares around 0.18. as soon as the end of next month. I haven't looked at European metals for a long time, so here it is today. And here you can see that the shares making some decent noises in terms of breaking to the upside with a bear trap reversal from below 30 pence and a gap higher today, which seems to be holding. Breaking 35 pence could take the shares up to the top of that triangle from December, as high as 46 pence as soon as the end of next month. On to Caracal, which has had a recent test for support, another test for support. Many of these now, rising trend channel there from back in January, top of the channel there around 0.6, and we keep bouncing at the floor of the channel around the 0.32, 0.33 area, which is, I suppose, encouraging, especially given the way that the 50-day moving average now at current levels is rising well. We pushed the RSI back above the neutral 50 level as well, so hopefully 0.6 could be on its way by the end of next month. The stock which has pulled the rug from under the bulls is Premier African. I thought I'd look at this one. I'm going to look at just the ones that obey the charts, so also the ones that don't. Here we had the possibility that the shares would bounce around 0.7. They obviously didn't, and now we're below the 200-day moving average for the first time in over a year. That's around 0.59. Below that, we've got the risk of a move down towards 0.48, 0.49, which is where the shares started this year. So a bit of an easy come, easy go situation on Premier African. On to a better picture at Simec. Here you can see that we've got this extended falling wedge for the shares. They gapped up yesterday. They've held the gap and held above the 50-day moving average at 1.15, above the 50-day line. We're looking for a break of 1.25 pence and the last year's resistance line to take us up as high as 1.8 pence at the top of a December triangle as soon as the end of next month. Bullish divergence there as well, so it's a bear trap gap reversal and also a bullish divergence signal there from the RSI. Just 3 stocks to go now. First one is Surgical Innovation, and or innovations rather, and here we've got a situation where the shares are making progress within this rising trend channel from the beginning of last year. Top of that channel heading for 3 pence, and hopefully we could see that as soon as the end of next month. We've got the 200-day line rising nicely now, and persistent RSI trace there above the neutral 50 level since the middle of March. Stock which is a slow mover, but it seems to be relatively steady. Thor Explorations. Here we've got this rising trend channel from February last year. We've got a rising 200-day line, which adds momentum to the situation. Top of the channel there heading for 23 pence, while we remain above 17 in the 200-day line. And we could hit that 23 pence target, hopefully, by the end of next month. Finishing off with a charting win, and that comes from Versarien. I don't say that very often. Here we broke a line of resistance there at 1.3 pence. The feeling was that above 1.3 pence we would fill the gap there from the beginning of the month up to 2 pence. End of day close above 2 pence, and we could be looking at something rather more exciting, or even more exciting, which would be a move to 4 pence at the top of that broadening triangle from the end of March. But one would probably limit the upside scenario while we remain above the floor of that gap, just below 2 pence. So really above 2 pence or above 1.9 pence if you've got that kind of stop loss, looking for 4 pence on Versarien, which obviously would be quite a result given that we've been below a penny earlier this month. So well done there for the bottom fishers. That's it from me today. More updates tomorrow.